If you're planning to buy a home using a VA loan, it helps to understand the different ways the VA actually allows you to purchase a property. Most people only hear VA loan and assume it's a one single program with one set of rules. In reality, the VA allows several different types of purchases, and each option supports a specific type of home, a specific need, or a specific situation. So in this video, I'm going to walk you through the VA-backed purchase options available today, what each one is designed for, and what you can expect as you begin the home buying process. The goal is simple: give you a clear, reliable understanding of how the VA home loan works so that when it's time to move forward, you can do it with confidence. Before any of the loan types make sense, there are three requirements every VA buyer has to meet. First, you need a valid certificate of eligibility. That's the document that proves your service history meets the VA's requirements and that you have access to the VA loan benefit. Second, you need to meet both VA and lender level standards for credit, income, and any additional criteria. It's not a one-size-fits-all approval. Lenders still evaluate your financial picture the same way they would with any mortgage program, including verifying income, reviewing credit, and making sure the payment is affordable. And third, you need to plan to live in the home you're buying. The VA loan is designed for primary residences. You can buy a multi-unit property, but you must occupy one of the units yourself. Once those three pieces are in place, so the COE, the qualification and occupancy, the VA gives you several different ways to buy depending on the type of property you're looking at and what you want to do with it. The first and most common option is the VA-backed purchase loan. This is the program most buyers already know, and it covers more property types than many people realize. You can use a VA purchase loan to buy a single-family home, a townhome, a multi-unit property up to 4 units, as long as you will live in one of them, a condo in a VA-approved project, a manufactured home and lot, or a home you plan to improve. That is the core of the VA purchase program. If the property meets VA's requirements and you meet the financial guidelines, you can use this option and you're not required to bring a down payment. The condo piece is important. So if you're buying a condo, it must appear on the VA approved list. If it isn't approved, the condo project has to be submitted for review and the loan cannot move forward until the VA signs off. This is where a lot of buyers get tripped up. Condo approval has nothing to do with whether the home looks good or is in a great area. It's about the financial health and structure of the building. So if you're considering a condo, it's worth checking approval statuses early. The standard VA purchase loan is the foundation of the program. But if the home you're considering needs improvements, upgrades, or repairs, or if you want to build from the ground up, the VA allows that too. Some buyers find a home that checks most of the boxes but needs meaningful updates. The VA allows you to use this purchase loan for that situation as well. You can buy the home and finance certain improvements as part of the same loan. The upgrades need to be typical for homes of similar value in the area, and they must meet the VA's minimum property requirements. This is useful when the home is structurally sound but needs repairs like flooring, roofing, or basic systems upgrade to bring it up to standard. It keeps you from having to take up separate financing to handle the improvements later. The key is that the improvements must support the home's value and fit what's normal for the neighborhood. They're not intended for luxury upgrades or changes that fall outside local norms. When used correctly, this option lets buyers secure a property with potential and transform it into something move-in ready under one loan. The next option is the Energy Efficient Mortgage, or EEM. This is not a separate VA loan. It's an add-on that allows you to include up to $6,000 worth of approved energy-related improvements to your VA loan. Examples include installation, weather stripping, furnace efficiency improvements, heat pumps, storm windows or storm doors, solar heating or cooling systems, clock thermostats, and other energy-efficient upgrades. The purpose of the EEM is simple: give homeowners the ability to improve energy efficiency without needing a second loan. If used during a purchase, the EEM must be arranged and closed at the same time as the VA loan itself. Some lenders may not offer EEMs, so it's something you want to ask about early if you're interested. These improvements can sometimes increase the monthly payments slightly, but the idea is that the long-term savings on utilities offset the cost over time. So if you're planning to use this option, it's helpful to have a qualified energy audit completed to identify which improvement make the most sense. If the home needs more than minor updates, if it needs structural work, mechanical improvements, or significant repairs, the VA alteration and repair loan may be a better fit. This loan can be used in two situations. It can be added to a purchase if the home needs work, or it can be used through a cash-out refinance if you already own and occupy the property. So in a purchase scenario, the VA guarantees the lesser of the total acquisition costs, so the sales price plus improvement costs, or the as-completed value determined by the appraiser. This protects the buyer by ensuring the loan amount never exceeds the finished value of the home. With this loan, the improvements can take place after closing. The lender holds the fund in a draw account, and then the contractor is paid as the work is completed. Each draw requires your written approval before the funds are released. Repairs can include roofing, foundation work, flooring, electrical upgrades, plumbing improvements, HVAC system replacements, or just other updates that bring the home up to VA's minimum property requirements. So it's important to understand that renovation projects often uncover unexpected issues. The VA encourages buyers to consider all potential costs, including permits, inspections, title updates, labor, materials, debris removals, structural needs, financing costs, and then changes in scope. So some lenders may require a contingency reserve, usually up to 15% of the repair costs, to cover any surprises. Any unused funds are either returned to you or applied to the principal balance of the loan, depending on how they were paid. This option can be a great fit for buyers looking at homes that need significant work but are otherwise strong candidates for long-term ownership. When using a VA alteration or repair loan, you're allowed to choose your own builder or contractor. The contractor must be registered with the VA and may need to meet state or local requirements related to licensing, insurance, and bonding. Beyond that, you have full control over who completes the work. This is one of the areas where having a contractor with experience in VA-related projects can really help. They'll understand the draw process, required documentation, and inspection expectations. The VA also recommends that buyers get a clear understanding of the total cost of renovations before moving forward, including both expected and possibly unexpected expenses. Another option within the VA program is the ability to build a home from the ground up. VA construction loans can be used to build a home on land you already own or build a home on land you'll purchase as part of the loan. Not all lenders offer VA construction financing because these loans require additional underwriting and project management. If you want to build, you want to find a lender experienced in VA construction lending early in your planning. Here's how these loans generally work. The loan closes before construction begins. The lender holds the funds and releases them to the builder as construction milestones are completed. You don't make payments on the loan until construction is complete. Once the home is finished, the construction loan converts into a permanent mortgage either through a single close or a second closing. Some lenders offer a one-time close where both the construction loan and the permanent loan are banded together at the beginning. Others use a two-time close where the construction financing is separate and is later replaced by the permanent VA loan. Both options work. The availability depends on the lender. Appraisals work differently for new construction. The VA allows an appraisal based on plans and specifications if the foundation hasn't been completed yet. If the project has already passed that stage, the appraisal must wait until construction is complete. Once the VA issues the notice of value and the loan closes, construction can start. So the builder then handles typical interim costs such as inspections, title updates, hazard insurance during construction, and other builder side expenses. Lenders may offer an interest rate structure called a ceiling floor where the rate can float during construction but cannot exceed a maximum cap once the permanent loan is locked. You must qualify for the mortgage at the maximum rate. The VA also allows buyers to purchase or construct a farm residence, but only under certain conditions. You can use a VA loan to buy or build a residential home on the farm. You can also include the portion of the land considered residential, but the VA loan cannot cover excess non-residential land value, barns, silos, outbuildings used for farming, farm equipment, or livestock. The VA loan is designed to help you buy a home, not to finance a farming business. So if you plan to use farm farm income to qualify for the loan, the lender will evaluate your ability and experience as a farm operator. This includes reviewing your operations plan, expected income, expenses, and whether you have access to the equipment you need to run the farm. For new farmers, the lender may request a full operations plan and income estimate from a qualified farm appraiser or local expert. For experienced farmers, the lender will likely want records from an operating line of credit for at least the last 3 years. This option exists for buyers who want a rural lifestyle but still must meet VA residential guidelines. One of the lesser known features of the VA home loan is that it's assumable. This means a buyer can take over an existing VA loan instead of getting a new one. The buyer keeps the same interest rate, the same loan balance, and the same repayment terms. In high rate environments, that can be a major advantage for both the buyer and the seller. There's a funding fee of 0.5% for this assumption unless the buyer is exempt, and if the person assuming the loan is a veteran and substitute their own entitlement, the seller's entitlement can be restored. If the buyer is not a veteran or doesn't substitute entitlement, the seller's entitlement remains tied to that property until the loan is paid off. So assumptions require approval from the servicer and sometimes the VA. So choosing the right buyer matters because if the loan defaults after the assumption and entitlement wasn't substituted, the default affects the original veteran. This option can make a property more marketable and can also help prevent foreclosure if a homeowner needs to move but cannot sell. The VA home loan program offers more flexibility than most buyers realize. Depending on your plans and the type of property you're considering, the VA gives you several different ways to move forward. A standard VA purchase loan, a loan that includes improvements, energy-efficient upgrades, alteration and repair loans, construction loans, farm residence loans, and the ability to assume a VA loan from a seller. Each one is designed for a specific need, and understanding these options early helps avoid surprises later in the process. So whether you're buying a move-in ready home, a property that needs work, or something brand new, the VA loan benefit gives you more paths than most programs on the market. So if you're thinking about buying a home with a VA loan and want clarity on which option fits your situation best, use the link below to book a call with my team. A quick conversation early in the process can save you time, money, and frustration later on. And if you want straightforward, reliable explanations about buying, refinancing, or using your VA benefits with confidence, make sure to hit that subscribe button. My goal is to help you make informed decisions with clarity and ultimately win with Wade. We'll see you next time.